Okay, hey guys, welcome to today's video. So in today's video, I'm going to be sharing liquidity, purge, and revert. So probably some of us have been trading the dollar pairs, and most of us were probably caught and unawares with the new direction that we are seeing in the foreign pairs pegged to the dollar, or trading with the dollar rather. And so, as some of you have asked for market review from me, and most of you say you love that particular content when I actually go through the markets, doing some reviews and telling you what the markets will actually do. So this is more like me doing that particular video, more like a talk show of my price projection analysis kind of video. So just going to be going over what the market has done, why the market did what it did in time past, and um, why we're actually experiencing what we the current trend we're experiencing in the market, and what we likely see happen in future. So these the pounds pair which I like to trade on the 4 hours, and you can see all the way right here at this region, you can see how price came down, taking out this old high. And if you're conversant with how I approach the market here on this channel, you guys always know that I always look for an area of liquidity. When I talk in terms of coming to trade every single day, what I'm looking for is an area of liquidity. As price as price rather reached an area of liquidity for me to buy, or as price reached an area of liquidity for me to sell. You want to say if price have reached an area of liquidity, then we can start bargaining. And you guys know I also really love trading from the higher time frame also. So I look for areas of liquidity, you know what I'm saying, before I place my trade. And one of those areas of liquidity are swing highs and swing lows, or old highs or old lows. It can be on the monthly time frame, the weekly time frame, the daily, or the 4 hours. Now you can see what happened right here at this particular region. If I bring this crosshair right here at this particular region, you can see the way price came through down on this particular swing low and reverted to the upside. And since then, price had not seen lower prices from this particular region. But more also, I want you to pay attention to this red line I draw, this horizontal red line right here. What is this particular horizontal red line? That is a monthly time frame old swing low, or old low as the case may be. You want to say that low was created in March 2020, 2020 during the coronavirus era. So this particular server will not allow me to go back there, but you can see that clearly on trading view. If I go to trading view on the monthly time frame right here, you can see this old low. This is the old low created in the month of March 2020. You can see this new low coming down into that low, clearing out this old low. So you can see how price came for that low right on this particular candle, and that low was all the way from the monthly time frame. So one key point you want to note is that the higher the liquidity based on the time frame. You know what I'm saying? The time frame, the higher the liquidity based on the time frame, the more significant it is. In other words, if you're looking at a daily time frame and the weekly time frame, the weekly time frame liquidity areas of liquidity are more significant than the daily time frame liquidity. If price first reached to the weekly time frame liquidity before, and the um, daily time frame liquidity is still miles ahead, price will definitely react to that particular weekly time frame and liquidity. You know what I'm trying to say? Why? Because the structures you see forming the market is not based on supply and demand. Neither is it based on market structure based pattern, higher highs and higher lows. No, market is seeking liquidity, especially when we're talking about forex. Market is actually seeking liquidity on the buy side and on the sell side, and that's actually what creates these higher highs, higher lows, lower highs, lower lows, and consolidations you see in the marketplace. You know what I'm trying to say? Today's not about market structure, so let's just leave that. So this particular move you see down here, all the way to this particular um, monthly key level right here, and that's the 148.9. It's called a liquidity purge. Price came through, clearing out these lows, not just this 4 hours low, which is also a daily low, but also this old monthly low. So this is called a liquidity push, and you see how price reverted to the upside. You have to say, and only coming down lower for a little retracement where we had an opportunity to enter the marketplace. We entered on this particular candle right here, and we exited at this particular candle at this old high right here. So you see how price just pushed liquidity at the downside. This is market makers sell model, sorry, buy model rather. You can see this is an area of consolidation right here, taking out liquidities right here, all the way to a monthly key level. You see the revert, and price retrace and expanded all the way up to this particular time of this recording. So this is a typical market maker liquidity purge and revert. You know what I'm saying? So how would you have anticipated this move if you were watching it in real time? So I just want to point out the key things I was looking out for and how you would have identified. So one thing is you want to pay attention to swing lows and swing highs. So let's take for instance for this swing low. When price trades through a swing low, you want to know if price is going to keep trending towards that's going to ignore this swing low and keep trading lower. Like you see in this particular area, this is a swing low. Price trades through this particular swing low and kept trading lower. So you want to watch out for those kind of reactions in price. So, but in this case, price traded through and traded higher, and not just traded through this particular swing low, went all the way to a monthly key level. You want to say and traded are reverted from that area. So that's you want to watch out for the reaction of price at that particular area. The next thing you want to watch out for is there going to be a break of structure. You want to say in the new direction we're seeing price reverts to. And in this case, you saw price broke this structure, this short-term high right here with this particular move upward. So for those of you that have watched my institutional order flow video, you understand what I'm talking about. So this is an institutional market structure shift. Price has shifted structure to the upside, institutionally speaking. You know what I'm saying? So this is what has happened right here. So this is a purge and a revert, breaking this structure right here. Mind you, it is not just about break of structure because I see a lot of people talking about break of structure. Look at here, if you talk about break of structure, price broke this structure, price retraced, price didn't go up. Why? Because this is not an institutional market structure shift. This move upward is not institutional market structure shift. What validates this area as an institutional market structure shift is that price cannot come back for this old low. So this validates this area as a market institutional market structure shift. And mind you, the particular level we are keying that area from is the highest of all time frame, which is the monthly time frame. So this is an institutional and market structure shift, and we can see how price respects that on the lower time frames. If you go to the weekly, right here, you can see. Okay, let me bring that properly. You can see how price reverted completely. If I come to the daily time frame, you will see how price when it's reverted, it broke structure right here. You got what I'm saying? So mind you, we're looking at what we're looking at on the 4 hours right here, and we can see how price trade through and broke this structure. Mind you, when I talk about institutional outflow, I say when the price is retracing, you don't want to see price come for your point of origin. If you watch the institutional order flow video, you understand what I'm talking about. So that was one of the things we're looking out for to identify this up move. So the next thing we're looking out for was we're using smart money correlation analysis, which is using the dollar index to pair price. So the old monthly high on the pounds was sorry on the dollar index was at 110 600 on this particular server right here. That was where price came on this particular area right there. You get, but you see it clearly using if I use the trading view. So let me use the trading view platform dollar index right there. You're going to see what I'm talking about. So look at it there. That's 110,780 on this particular server. So if I zoom in rather in time, you see that's the old high right there on this particular area, right? That's the 109,750. So price took out that this old high right here. You understand with this particular move to the upside, and that's what you see also replicated right here on this particular platform, and that is the inverse happening right here on the pounds and other foreign pairs. So what are you going to anticipate? The next thing you want to look out for is the smart money divergence. You understand? So using the 4 hours, because this is where you're going to see um, this clear cut divergence, especially when you're trying to catch day trades and weekly trades. You have to look at smart money divergence using the 4 hours. So you can look at when price made this higher high, price came right here and made higher highs, taking out that swing high that we saw using the trading view. So here, by this, the market made an higher high. So that will indicate that with this particular trend line, showing us that price shows a direction to the upside. And if we come to the pounds, we can see that why that was happening. That particular first candle on the dollar index. We saw that price still made right here a lower low. So this particular move in price is a symmetric price move. This is not telling us if we're only focusing on the pounds and on the dollar index. This is not telling us anything about smart money being present. Instead, this is telling us that we should stay away from trading foreign pairs. That price could actually keep on going lower. So this particular move is not what as if we're only focusing on the pounds and on the dollar, because when the dollar is making higher highs, you want to see the pounds making higher low. You know what I'm saying? Not lower low, as you can see in this case. You know what I'm saying? So this is not telling us anything that there's an opportunity to trade on the pounds. So this is where more techniques come into play. So when you understand what comprises of the dollar index, the components and the composites of the dollar index, you understand that the euro actually plays a major role in terms of percentage on the dollar index. So what I did was I came to the euro and saw whether we have any form of smart money on the euro, and we did actually. You can see price at this low to this particular order low. We saw price actually making a higher low right here, validating the smart money presence that we saw on the dollar index. And you can see the way price reacted all the way going downwards. Even on the pounds that was not symmetric, that was very symmetric rather, we saw the response in price to the buy side, and also following also on the euro and other dollar pairs also. So this is how the second criteria we're looking out for this particular bullish move to the upside. So what is price going to do going forward? You know what I'm saying? What is price going to do forward? Because I like actually putting things here. Why? Because I feel like it's helping a lot of you people, and I want to do my best to contribute. So you can see that. Okay, let's look from the higher time frame right here. From the monthly, you can see how price actually traded into that old low all the way from 2020. So let's see. We drop down to the weekly time frame. You can look right here on the weekly time frame. Now you can see that we have a fair value gap right here on the monthly time frame. So this is an area to the upside I'm anticipating price to reach for if price keeps trading higher. But what am I expecting price to do within this week? Right, to say, since we're on the daily time frame right here, if we drop down to the daily time frame rather, we can see that price broke this particular structure. So if I'm to use this particular trend line and use it here, you can see that price broke this structure right here on this particular candle. Price broke this structure, and since this structure was broken on the daily time frame, we have not seen a solid retracement. That's an obvious retracement in price. You know what I'm saying? Though we saw price coming for this old low right here, we saw price coming for this old low, but we've not seen a real retracement down in price. So I'm expecting a retracement down in price. So if I drop into the 4 hours, you're going to get in great details of what I'm talking about. So I'm expecting price to drop in retracement coming for this particular fair value gap that we have right here under the below these old lows. And since tomorrow, at the time of this recording, this is Monday, 12th of September 2020. I'm expecting tomorrow, which is going to be 13th, we're going to be having the CPI news release. So I'm expecting price to drop lower or expand higher. So if price is expanding higher, it should go for that particular monthly high. Look at that monthly fair value gap above this high right here. So price should either expand to this upside or price should retrace here, giving us an opportunity to trade from this low right here to this high. But if price expands, let me use some diagrams. If price expands higher instead, what we want to see, we want to look for an opportunity at this fair value gap and trade price lower down to even attacking this particular low right here. You get. But one of these things is what I'm expecting price to do going forward tomorrow, since we're going to be having the CPI news release. So if price trades down to this low right here, which is this particular fair value gap or below these old lows right here, what I want to do is I want to look for an opportunity at this area to take price to this fair value gap on the weekly time frame, or vice versa as I showed earlier. So this is what I'm actually anticipating and looking out for in the pounds, which is the foreign pair. You know what I'm saying? And also, mind you, I'll be correlating that with the dollar, because if you look right here, if I go to the daily time frame, you can see that we have an opportunity for price to retrace. This an imbalance, also a fair value gap right there. So I'm expecting price to retrace into this particular area and expand lower. You know what I'm say? For me, you want to say, or vice versa. That's coming down for this low, which is a fair value gap on the weekly, and actually um let me do that. Let me draw the diagram properly. And actually coming back for this area or reversing to this high automatically. Why? Because we have more opportunities to even the buy side. So this particular low is actually a fair value gap on the weekly time frame. If I zoom that out, you can see this. Okay, let me take this out. So you can see that this is actually a fair value gap on the weekly time frame, and below here we have another block. So price can actually retrace to this other block or below this fair low of this fair value gap and expands higher during the CPI news release, which will be giving us an inverse reaction on the pounds, or retrace into that particular fair value gap we have on the daily, which will probably be close to this other block we have also on the weekly. So any one of these things will be the reactions we're expecting in price. All we have to do, we want to wait for price to come to us. You want to say we don't want to rush price. We want to wait for price to come to us, and whatever price gives us, you want to say in terms of liquidity reach, that's what we're going to be using to frame our setups either on the long or on the short. So I believe this video you found it very insightful, and it helped you or is going to help you depending on the time you are watching it. If so, you can leave a like and subscribe to this channel, and see you in future videos.